Hi everyone, sorry for the late start today. I was having some technical issues. But I think everything works now. But if there are any issues that you can't see me, you can't see my slides, feel free to just let me know in the chat. Okay, let's just go ahead and get right into it. Let me. Okay. So before we get started, as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst at Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll go through the essentials for Fibonacci retracements, including a checklist for you to follow when identifying Fibonacci retracements. Then we'll go through the key points for an ideal market structure, looking out for any significant swings and market trends. And most of these we've already gone through in our previous sessions. So if you have missed the previous sessions, don't worry, we'll go through them briefly today. Then we'll briefly talk about the different Fibonacci levels from the negatives all the way to the levels greater than 100. And lastly, we'll introduce Fibonacci confluence levels as well as Fibonacci projection levels. So let's do a quick recap first. Here's a Fibonacci checklist to follow when first starting out with the retracements and something to look out for as well. So firstly, you want to check is the market structure clear by looking for really big zigzags. Then you want to identify the recent trend, so our price is going down or up. And we normally will follow the general trend of your price. Next, we want to identify recent major swing lows or highs. And we'll show significant examples of, or we'll show you examples of significant swings that you should look out for. Then you want to connect the two extreme points, highest to lowest for a downtrend and lowest to highest in an uptrend, as shown in the image here. So here's an example of an insignificant swing, so something that you should stay away from. So here's an example of insignificant swings. So these are bad points to use for your Fibonacci starting and ending points. So you can see the price movements here are way too small and there are no significant swing highs or lows. So here's another incorrect example. And here's a correct example of significant swings. You can see there are very clear troughs and peaks and very obvious moves up and down with very clear market movements. Oh, okay, we have a question. Will the recording be made available? This webinar is being recorded. I'm not too sure where the recordings will be posted. But I think if you email the IronFX team, I think it's on their website, probably. Just the IronFX admin team. You can just ask them for the recording, and I think they will help you out. Let me see if I can get the email for you. Because we always get these questions as well, but I'm not too sure. But yeah, I think the email is on their page. Anyway, yeah, feel free to just email the admin team and they'll help you with this, with the recordings and stuff. Okay, so here's another example of significant swings. So I've drawn out the peaks and the troughs in this example to show you exactly how clear it should be. Okay, next is following the market structure. So here's an example of how not to draw a Fibonacci retracement trend line. So your Fibonacci trend line must follow price structure clearly. In this case, you can see there is a zigzag market structure. The retracement drawn here cuts through the market structure, making it less effective. So when you're drawing your trend line, you should follow the movement of price and don't deviate from it by too much. So here's a correct example. You want to make sure that you pick market structures with clear upward and downward movement. Also make sure that it follows price movement. This tends to work better on higher time frames due to there being less noise. So we normally will do the analysis on time frames H1 and onwards. So H1, H4, 1 day, so on and so forth. Okay, another example of a clear market structure. So although Fibonacci retracements can be used in both choppy and trending markets, it's important to look for a very clear movement in price. So here's an example of an unclear market structure. Okay, so these are the different Fibonacci retracement levels that we normally use. So for the negative levels, we use minus 61.8 and minus 27.2, and these are the Fibonacci expansion technique that we went through last week. Then the mid-range Fibonacci retracement levels, the 23.6, 38.2, 50%, 61.8, and 78.6. These are the mid-range, and we use them for our Fibonacci retracement. And lastly, the levels that are greater than 100%, these we call our Fibonacci extension. And we went through this, I think, in the second session of our Fibonacci series. So if you missed that, don't worry, I think we'll go through some examples again. Okay, so you can see in the GIF, this is how we will draw our trend line, making sure that it follows the structure of price as closely as possible. Okay, so here you can see all the different Fibonacci numbers that we mentioned in the previous slide, and how it looks drawn out. So take note of the starting and ending points of our Fibonacci trend line. Okay, you can see we follow price structure very closely. Your mid-range, again, are your retracements. You can see in that box there. The negative are your expansions, and extensions will be the levels greater than 100. So in all of these three Fibonacci techniques, we are only using one tool, which is our Fibonacci retracement tool. Okay, so let's dive into this week's topic, which is our Fibonacci projection. So for Fibonacci projection, this uses a different tool. This uses I think it's called the Fibonacci extension tool on TradingView. And ultimately, unlike the other three methods that we've gone through in our previous webinars, this method requires 3 points. Okay, the starting, the middle, and the ending point. So we use mainly the 61.8, 78.6, and 100% Fibonacci projection levels for this. Okay, for this method, we are typically looking for a flash or zigzag shape. Okay, now let's look at a couple of examples of this. So here's a simple example. You can see clearly the starting, middle, and ending points that follow the swing highs and lows of price. So here price has bounced off the 100% Fibonacci projection level. Okay, you can kind of see the shape. So the starting, middle, and ending, and this is the tail end of that lightning bolt shape. So here's another example with a very obvious zigzag or lightning bolt shape. Okay, take note of the Fibonacci trend line that follows the market structure really clearly. And it also projects price to reach the 78.6% Fibonacci projection level. Okay, so let's see how this plays out. So you can see ultimately price bounces off our 78.6% level. Okay, here's another example. You can also see the lightning bolt shapes from the arrows. So this time the lightning bolt shape is slightly inverted. Okay, and here we are projecting our level to hit that 100% Fibonacci projection. And let's see how this plays out. So you can see it continued towards that 100% and then reacted off of it and bounced off. Okay. So when does a Fibonacci retracement level become invalid? So one of the most common scenarios of this is when price makes a lower low. So this is assuming you are drawing from the top to the bottom. I'll show you an example in a bit. But if there are bars on the right that break your ending point, it then becomes invalid. So there are Fibonacci retracements, like we mentioned earlier, that are negative. So your minus 27.2 and your minus 61.8. But these go beyond your endpoint and they are still valid. Okay, so it's completely different from our Fibonacci expansions. So here's an example of an invalid retracement. So price has broken that 0.0% level and has made a lower low. So you want to always remember to pick the lowest point with nothing on the right of the ending point. So you can see because price has broken below this ending point, it's made a lower low. So we can't use this Fibonacci retracement anymore. Okay, any questions about that? Okay, if not, let's move on. So combining Fibonacci retracements is a pretty useful tool. Okay, it's basically called Fibonacci confluence. So the trick here is to find multiple Fibonacci levels. It doesn't have to be retracement, it can be retracement or projections, extensions, so on and so forth. So this increases the probability of a bunch of Fibonacci levels lining up and working together versus one single Fibonacci level working on its own. So that's the definition of a Fibonacci confluence. So let's look at this example. So we have three different Fibonacci methods here with the minus 27% Fibonacci expansion. That lines up with the 161.8% Fibonacci extension and the 78.6% Fibonacci projection. So take note of that flash, the lightning bolt kind of shape. Okay, and as well as the Nike tick. So if you weren't here for our previous webinars, Fibonacci expansion, so the negative levels, those use that same lightning bolt shape that we use for projections, what we're talking about today. So it uses that same shape. So you can often use the Fibonacci expansion, this red one, together with your projections. As for extensions, that's what the Nike tick shape refers to. You're basically using your retracement from this starting point to this ending point and projecting where prices will reverse off of. Okay, so this is our Nike tick shape. Over here, it's an inverted Nike tick. Okay. Now in this example, we have two methods. We have the projection, which we're talking about today, and the extension, which we talked about 2 weeks ago. So your projection uses 3 points. You can kind of see it here. As for your extension, we're drawing the trend line from the starting point to this ending point because price has already reversed off this level over here. Okay, so we're projecting where it'll go towards. And you can see our 61.8 projection lines up nicely with our extension, which resulted in price bouncing off of this confluence area here. So it's already considered confluence as long as there are 2 or more Fibonacci levels lining up. Okay, any questions so far? Okay, if not, let's move on. If you have any questions, feel free to just put them in the Q&A section. Okay, let's move on. So next, we are going to be looking at another example of a confluence. So here we have another two Fibonacci techniques. My camera is a bit okay. So firstly, we have our Fibonacci projection that we're talking about today. You can kind of see that flash or that lightning bolt shape as well, I think. You know, with the starting point is here, middle point here, ending point here, and we're projecting where prices will reverse off of. So here you can see our 100% projection lines up with this 127 level. The 127 extension is the Nike tick shape. So you can see price breaking out of this 100% and then reversing off of the 127 level. So you can see price reversed off nicely off of this confluence area. Okay, so in this example, the 61.8% Fibonacci retracement is in line with the 100% Fibonacci projection to give us a strong confluence area highlighted by that purple square here. Okay, and you can see where price bounced off of. So our 61.8 Fibonacci retracement, you can see this blue arrow that I've drawn out here. That lines up with our projection, and you can see the projection again where I've drawn out the orange arrows. This is our starting point, our middle point, and our ending point. And price reverses off a bit. So I'm not sure. Okay, I think you guys can pretty much see the lightning bolt shape here quite clearly. Okay, and then price bounces off this confluence area. Okay, next, in this example, we have 3 types of Fibonacci techniques. Firstly, we have the blue, which is our Fibonacci expansion. And this, again, just to remind everyone, this uses the flash shape. So oftentimes when you have the flash shape, you can use your expansion together with your projection. So that's what we did here. We have an expansion and we also have a 100% projection. We also have another Nike tick shape here, an inverted Nike tick with the 127.2% lining up with the previous two levels. And the price reversed off of this confluence area subsequently. Okay, um, let's move on. I think we still have a few more examples to get through. So in this example, we have a swing low support right below here at the swing low and one long-term 100% Fibonacci projection that's in line with another short-term 61.8% Fibonacci projection. So this makes a very strong confluence area and we see price bouncing off at the 81.084 level. Okay, so that green arrow first, if we break it down slowly, if we focus on the green area first, you have your starting point, second point, and ending point. That's our first Fibonacci projection. Um, this 100% Fibonacci projection lines up with the swing low. Then we also have another starting point, middle point, and ending point for our second projection. And that uses a 61.8% projection that lines up again with that swing low and also with the previous 100% projection level. Okay, and we are projecting prices to bounce off this level, which it did. It bounced off nicely. Okay, so some trade management techniques when it comes to Fibonacci confluence. So now that we know how to identify a Fibonacci confluence, these levels are important because prices tend to get attracted to it, but it might not be able to go beyond it. So that's why we will typically advise you to place your stop loss beyond a key confluence area. And as I mentioned, the reason for this is because more often than not, price is attracted to such strong areas of Fibonacci confluence. So if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. And that's one of the reasons why most people complain that they got stopped out right when the market starts to reverse. Okay, next is take profit. So we will normally advise you to place your take profit before a key Fibonacci confluence area. And the reason for this is because when price reaches the confluence area, there's a high chance it won't be able to go beyond it. So instead of reaching your profit target, it instead reverses back to your entry or even worse, your stop loss. And that's one of the reasons why people might complain that the market is being manipulated because they miss their take profit by one pip. Okay, and yeah, so there's an example below. You can see the Fibonacci confluence. We're placing our take profit below that, and this is for a buy entry. So if we're going for a buy entry, we're expecting prices to go upwards. So we place our take profit below the confluence area and our stop loss below the confluence area as well. So you can imagine if it's a sell entry, we're expecting prices to drop. We'll place our stop loss beyond it or before it, so above, and our take profit will also play below the confluence area, or rather above it. So if it's a sell entry, it would simply swap places. So your stop loss would be here, or rather here above the confluence area, and your take profit would be above your Fibonacci confluence. So here, buy entry, take profit, and stop loss are below. Sell entry, take profit, stop loss will be placed above the confluence areas. That's typically how I try to remember it, but it's pretty intuitive as well. Okay, are there any questions so far? Okay, if not, we still have some time, so I'm gonna pull out my charts and then we can take a look at um some examples. Okay, let's look at GXY. Okay, can you guys see my charts? Okay, great. Okay, so we're gonna start off by looking at DXY first. I'd like to start off by looking at the higher time frame so that we get an idea of the general direction of price, and then we zoom into our lower time frames. So looking at our daily time frame, you can see, I mean weekly time frame, you can see prices recently moving upwards. So that's the general trend recently. Okay, so we do normally advise you to follow the general trend unless there are there's very obvious reasons why you think prices might be changing. It could be an indicator, or a confluence area. So this is where I'll be placing my pivot. So the first thing I do after establishing the general trend is going with our horizontal levels. So these are purely graphical. We're just looking at where our swing highs and swing lows end. Okay, this is my first support. Okay, now going in with um our retracement first. Okay, so for retracement, we use this tool, this Fib retracement tool. Um, Okay, if you click on it, you can go to the settings and you can highlight any of the levels that you're looking at. So normally for retracement, we'll just look at all of the levels. Okay, so you can see our 61.8 lines up with our first resistance. Our 38.2 also lines up with our pivot. Okay, so I'll just keep the 61 and the 38. Even though this 23.6 does line up with our first support, we can't use it because price has already broken out of it here. Okay, so I'm just going to keep the 38 and the 61. So it's important, oops, 61. So it's important to keep your Fibonacci as clean as possible. So get rid of any levels you're not looking at, because when we're looking for confluence levels, it can get quite messy quite quickly. Okay, so if we zoom in, you can kind of see our Nike tick shape here. Okay, so yeah, a Nike tip would be like that. An inverted Nike tip would look something like that. Okay, so we can see that here. I'm gonna go in with a retracement. Okay, you can see our 61.8 lines up with our pivot. Okay, so when it comes to Fibonacci levels, it doesn't have to line up exactly at that horizontal level that you've identified. As long as it's kind of close, that's good enough, because for confluence levels, we tend to look for areas instead of specific levels. Okay, 23.6 also lines up with our first support. Okay, my 61.8 lines up with our first resistance. So I'm just going to keep that. Okay, so with Fibonacci projections, we use this tool. It's called the trend-based fib extension. And when you click on it, you can click all fibs, go to settings. We're just mainly looking at 61, 78, and 100. Okay, and that's why you can see technically 100% lines up with this swing high, but it's a bit far from where price is currently at. 61 lines up nicely with our first resistance. And also, if you can't quite see where the shape is, let me draw it out for you. Okay, so this is the lightning bolt shape that we're kind of looking at. Okay, so I'll just keep the 61 since it's in line with our first resistance. Um, let's see if we have any other levels. Okay, I think that's it. Okay, so I'm gonna highlight this area here. Okay, because we might see a bit of resistance in this area, especially since we have a confluence area and we have prices that reacted off this area many times before. Okay, so this is what I mean by we normally follow the general trend unless you have quite obvious reasons to expect a reversal. Okay, so we are still expecting prices to move upwards. Again, this depends on other fundamental factors as well. Okay, so prices we're expecting to continue moving upwards, but we have to be careful because of this confluence area here. So let's pull out indicators to see if they support our analysis. I like to start off by looking at Ichimoku and MACD because at one glance you can see what the signals are. So with Ichimoku, you can see prices moving within the cloud, which is a kind of a transition phase. So it doesn't really tell us much at the moment. So I'm going to remove that. With MACD, you can see it's giving us a very bullish momentum. You can also see, if I zoom in, prices moving, pushing above the upper band of our Bollinger Band, which is also a bullish signal. Okay, so they both support our analysis. RSI isn't telling us much here. Let's look at stochastic. Okay, it's not really telling us much as well. Okay, so let's maybe look at our moving averages as well. I like to use simple and exponential together. And you can see prices moving above both of the indicators as well. So that's also a bullish signal. This is TradingView. It's just tradingview.com here. But I think if you use MT4 to trade, they also have these, not I think, they also have these symbols and they look relatively similar as well. So just remember for your projections, you are using 3 points. For your retracement or any of the other three techniques, we are using 2 points only. And on MT4, you can also adjust the settings and look at specific levels. Okay, any questions about this? No. Okay, let's look at another chart. Maybe now we'll look at uh, a major currency pair like maybe pound or maybe euro actually. Okay, so euro tends to be inversely proportionate, inversely correlated to DXY. So recently, previously we just saw DXY, we are expecting it to continue moving upwards. So we're expecting the opposite for euro. So if we look at the general trend, prices have been moving upwards, although there has been a recent um there's been a recent down trend, not really a trend, but recent drop in price, as we see here. Okay, we have a question. How do you draw Fibonacci extension? Yeah, so the extensions are basically your ticks. So for extensions, we call them the Nike ticks. So this is your upright shape, and this is your upside down shape. Okay, and here we actually have one like this. Okay, you want to make sure that it surpasses 100% of this initial retracement. Okay, so before you use this method. So if we just go in and take a look, okay, you can see my 127 prices are moving towards this level here. The 127, right, in line with where price is currently at. This is also a Fibonacci, an overlap level. Basically means that there are a couple of swing highs that have tested this level in the past, swing low now currently testing this level as well. So yeah, that's how you use an extension. I hope I answered your question. Um, yeah. Okay, we have a request for gold, so I'll just maybe identify or like go through the Fibonacci levels that we have here, since we are focusing on Fibonacci today, and then we'll look at gold. Okay, I have a retracement here. Okay, my 61.8 lines up. So I guess this would kind of be a pivot level. Okay, and my first resistance would be here. First support, maybe down here. Okay, and we are expecting prices to drop. Let's see if we have any lightning bolt shapes. Okay, my one, no, okay. This is a lightning bolt shape, but price has already broken out of this 100, so I'm gonna delete it. Oops. Okay. I think that's all the levels we have. So I'm gonna go ahead and look at our gold now. Okay, so on our weekly time frame, you can see the general direction moving upwards. Daily time frame generally upwards as well. Okay, although prices are moving as kind of moving downwards now. So again, with gold, gold is inversely related to DXY as well. Okay, so here we have prices moving in an ascending trend channel. Okay, I'm gonna go in with our first resistance first, followed by our, I guess, pivot. And then lastly, our support. Okay, going in with our retracement. Okay, 50% lines up with our first support. Okay, our 61 lines up. This is our projection, lines up with our first resistance. So this is the lightning bolt shape. Okay, so like I mentioned earlier, you can use your expansion as well to see if there are any levels. Okay, my minus 61.8 lines up with our first resistance. Okay, so over here we already have this confluence area here. Okay, and we already saw price reverse off this level as well. So you might see prices continue within this ascending trend channel after it bounces off our pivot, or we could see it break below the pivot, bounce off the channel, and continue upwards. The general trend here is pretty bullish, so let's see if our indicators support that. Okay, prices are moving above the cloud, so it is giving us a bullish signal. MACD on the other hand is giving us a slightly bearish momentum. Let's maybe look at our Bollinger Bands. Okay, Bollinger Bands aren't really telling us much here. If we look at RSI, okay, RSI isn't really telling us much as well. Okay, stochastic here we have a hidden resistance level, which basically means okay, so when you see the peaks here, right, on our price chart, right, prices are making a higher high. Okay, but like from here to here and from here to here. Okay, but on our stochastic, you can see prices reversing off of that resistance level. So we can expect prices to maybe drop a little bit more because it just recently reversed off of that resistance again. Okay, so here, I think it will move, it might break below the pivot, but I think it will reverse back and continue towards the resistance. Ultimately, again, it depends on what happens with our DXY, but from just looking at this chart, I think it'll continue within the ascending trend channel according to our Ichimoku since it's moving around the cloud. And the bearish momentum is quite minimal as of right now. And the stochastic, you can see, even though we have that hidden resistance, it already did reverse slightly off of it. So we might see a bit of a reversal back upwards. Okay, any questions? Okay, if not, before we go, I just wanna talk about this website a little bit. It's completely free to use. It's just the forexarmy.com. And if you've missed our previous webinars, feel free to check this website out. Um, yeah, this is just under the trading guides. I'm not sure why it's not loading now. Yeah, this one, how to draw Fibonacci retracement correctly. We have videos on retracements, extensions, if you're still unclear. We have some of the things that we went through today as well. Some things we went through the previous week. So if you missed that, feel free to check this website out. Yeah, I think the most important would just be looking at the examples of finding a confluence area. Yeah, I think that would be the most important because you can see when I'm analyzing my charts, I'm trying to look for confluence areas as well. Mm, yeah, I think, yeah, feel free to check this website out in your own time. And if there are no other questions, yeah, that's all I have for you guys for today. Thank you guys so much for joining me. I hope you guys found this session helpful. And I will see you guys. Oh, next week, Desmond will be doing a Fibonacci confluence series. Not series, but webinar where he'll go through a bunch of examples. So stay tuned for that for next week, and I'll be back the following week. Thanks, everyone. Have a great rest of your week, and I'll see you guys again soon. Thanks, everyone. Bye. And if you liked me, feel free to find me on LinkedIn. It's just my name, Melanie Chong. And yeah, feel free to follow me on there. Yep. Thanks, everyone. Bye.